Peter McGuire is CEO of XM Australia, and Henning Gloystein, Director of Energy, Climate and Resources at the Eurasia Group. Thanks, gentlemen, for joining us this morning. Peter, let me go to you on that. Again, up to about last week, everybody was like, oh, the fight with inflation is like nearly over. Everything's going to be hunky-dory. And now we've had this talk of 6%, like Amar said, or above. So the fight on inflation is not over, right?
No, absolutely not. And this is the great dilemma that I think all central bankers are facing. So as it moves forward, where are we going to be in 3 to 4 months' time as far as rates? Are we really heading to a US dollar very strong push to the upside, currency wars, massive volatility across the FX space? I won't be surprised to see that, because the first 2 months of the year have demonstrated that. And the last 2 months of last year really set us in tone, where the yen went from 150 to 128. It's back at 136.5. So it's just been a monstrous trade. Euro's back at nearly 105.50. So all of these markets are whipsawing and whipsawing violently. Commodities have been a bit of a no-show. Some of the base metals performed extremely well towards the tail end of about this time last month, but they dived since early Feb. Where we sit, Omar's comments as far as oil, it's just been range bound and there's been no breakouts either side. I'm erring on the other side. I think energy prices will probably go up from here, but it's going to be an equal shot. There's a 50-50. The Fed, I saw some documents or some readings yesterday. The only central bank that traders have needed their rate hike bets and expect rates to peak in July at 5.35%. So, they're erring it up each and every month. And this is the great challenge that traders face, and certainly consumers. Where is inflation and where are rates going to end? And then you've got the next part of that, of course. How do you go as far as GDP, growth targets? Henning, I'm looking forward. Before the show started, I asked how are things. He said it's fairly dire in the UK, and we're conscious as far as the big picture there. So I'm not expecting any resounding upbeat forecasts for really many asset classes at all over 23, Dyala.
Yeah, not bullish, not hopeful. Peter, let's go just sticking to the China commodities angle. Again, we're expecting, the IMF is expecting 5% plus growth. China itself has said it's hoping to go back to that this year. But that consumption that's going to contribute to the GDP is expected to be very much domestic driven, right, as opposed to expenditure elsewhere. And so what impact is that going to have on commodities and the price of commodities and how they're playing into inflation? Does that sort of allay the concerns a bit about how much commodities can push that? I mean, Amar is bullish commodities generally long term, but how is that going to, the China story this year going to impact inflation in terms of commodity pricing? Oh, we've lost your sound, Peter. You're on mute. Yeah.
With 90 or 100 million apartments that are uninhabited, maybe they'll be putting some cooking equipment in each one, and you'll be able to get some movement there. So residents will actually take ownership. The challenge is from a real estate perspective, and that's the largest part of the Chinese economy, that's really hemorrhaged terribly over the last few years. And I know that the government's come to a rescue package and they're trying to manage themselves out of that. But internal consumption, yes, it's pretty hard for tapped out Westerners to keep on buying goods from China while they've got their own issues at home as far as food inflation and the cost of goods, and the West going under massive inflationary spirals. And it's creating much hurt, I think, across not only Wall Street. That'll materialize in the next 6 or 8 weeks, but certainly on Main Street. I'm just looking here. You've got core PCE price index year on year. For the US, it came in up 0.6. This is as bad as it's been in the 80s. So your point as far as domestic demand, it will have to be the answer for China, not external demand. And then how are they going to manage higher energy prices, higher, if you do get that, the inflation side as far as base metals ticking up, and everyone's saying you're going to see a resurgence there. So China's got its hands full. And I think that they realise it could be just a long, slow game. You know, that 4 to 5% growth is going to be a godsend for them if they can get those sort of numbers. And we'll just have to wait and see whether it materialises.
Okay, as far as the US goes, is that 2% inflation target now getting a little bit compromised, given the wage inflation we're still seeing, the tightness there, etc.? You know, do you think we'll see a compromise on that in the next few months to a 3-4% target? You know, by the end of the year, as opposed to 2%, and you know, or are they going to stick hard to the 2%? Do you think?
Well, Dyala, if it keeps on ticking up at this sort of level, then yes, they'll have to revise that, I would say, up, and that's something they don't want to do. But the great challenge is the stagflation story. They're really stuck between a rock and a hard place. And if you were to see energy prices tick up from here, this would create major hurt, and it'd be just a nightmare for every central banker. So, yeah, I've got my own mixed views as far as equities and how China plays this year, and I think it's just going to be fascinating to observe. And I'm not looking for any well, I'm looking for surprises, but I'm not necessarily looking for them to be bullish.
Well, Peter, let's talk about discounts and price of energy to Asia, India being one of them. Amar just said they're getting relatively cheaper oil. It's not very cheap, but it's relatively cheap for India, and it's kind of, you know, booming as we go. What about the outlook for China in terms of sort of gas supply and prices to come this year, whether it's summer or into winter? Any concerns there? Last year they had a problem, no problem actually, because they weren't growing too much. But you know, if they do go back into this sort of growth trajectory this year, what's going to happen with them in terms of fighting for LNG, let's say, with Europe? Is there going to be
I mean, you know, we've just got to see how. And I want to answer one thing first. And I'm going to India in a few weeks' time. I've spent a lot of time there over the last 8 or so years, and it's totally different to China. I don't think it's got a lot in common with China really at all. And I'll explain it this way. A very young population versus a very old population in China, a one-child policy versus a many-child policy in India, a far more, I think, entrepreneurial way of thinking in India. That's the framework that I see. They're very, very gung-ho and capable. You've only got to look and see the Indian principles of corporate world. So I think India, it's certainly going to be their decade, and if not their century. Now I'll move on to China. So China's got to face the facts that it's a production house for the West, and if the West isn't buying and the West is hamstrung, then they've got to look at internal demand to fuel and keep everyone satisfied and keep food on the table. But I think that they've got their hands full. They've got a created property market. They've got a lot of internal issues that are going to have to be managed forward. And, you know, the commodity side of things as far as consumption, we've just got to see who wants what, you know, over the next matter of 6 or 12 months. And when I say who wants what, regardless as far as internal demand, they'll look at exporting as much product as they can. And we've got to see whether the West is capable of buying that product and whether they're going to see massive discounts as far as price. I believe we'll see massive corporate downsizings across the West. And I think that's going to have a massive impact on China also, because they'll be looking at a similar mindset because they haven't got consumers buying their goods.
Thank you so much, gentlemen. We've run out of time. Thank you to Peter McGuire, Amar Najia, and Henning Gloystein. Thanks for joining us today. Have a great remainder of the week.
Thank you.
Thank you, Dyala.